The indicator we're discussing here is known as VSLRT, which stands for Volume-Supported Linear Regression Trend. This indicator is designed to go beyond traditional trend-following indicators, such as moving averages, by incorporating both price and volume data to determine market trends. While many popular trend filter indicators like moving averages primarily rely on price movements, VSLRT takes volume into account when assessing and identifying trends in the market. In this video, we will delve into what VSLRT is, discuss the optimal settings to use with this indicator, and explore how you can use it effectively to recognize trends in the market. Additionally, we'll demonstrate how to combine VSLRT with other technical analysis tools to create a potentially highly profitable trading strategy. If you find this information valuable, please consider leaving a like. Let's dive right into it and explore how VSLRT stands for Volume-Supported Linear Regression Trend. To add this indicator to your chart, you're going to go to TradingView, then load any trading security that you like. For me, I'm going to be using the 15-minute time frame of EUR/USD. Then click on Indicators, type in Volume-Supported Linear Regression, and it's going to be this one by Lonesome the Blue. The Volume-Supported Linear Regression Trend is a technical indicator. It combines the principles of linear regression with trading volume to better analyze and predict market trends. This basically means that this indicator checks the linear regression of the price and volume and then calculates the trend, strength, and direction based on that data. Next, we're going to explore how we can use this indicator to trade. But before that, let's explore this indicator's components. Now, as we can see, this indicator is composed of two elements: this green and red histogram and this oscillator traversing the indicator window. The histogram indicates short-term trends in the market, while the oscillator tracks long-term trends in the market. When the histogram bar is colored green, that indicates a short-term bullish trend. When it's colored bright green like here, that indicates that the strength of that bullish trend is increasing. This only happens when the trend is backed by a huge volume, specifically when the buy volume is greater than the sell volume. Now, as you can see, we have two more shades of green within this bullish histogram. This medium dark shade of green indicates that the trend strength is decreasing. This happens when the volume supports the trend, but the sell volume is higher than the buy volume. For this darker shade of green, it indicates that the trend strength is decreasing, and this occurs when the volume does not support the trend. Whenever you see this dark shade of green, that is a possible indication of a trend reversal. On the other hand, when the histogram bar is colored red, that indicates a short-term bearish trend. When it's colored bright red like here, that indicates that the strength of the bearish trend is increasing. This only happens when the trend is backed by a huge volume, specifically when the sell volume is greater than the buy volume. Now, as you can see, we have two more shades of red within this bearish histogram. This medium dark shade of red indicates that the trend strength is decreasing. This happens when the volume supports the trend, but the buy volume happens to be greater than the sell volume. For this darker shade of red, it indicates that the trend strength is decreasing, and this occurs when the volume does not support the trend. Now this oscillator is used to identify long-term trends in the market, and it functions just the same as the histogram. When the oscillator is colored blue, that indicates a long-term bullish trend. When it's colored bright blue like here, that indicates that the strength of the bullish trend is increasing. This medium dark shade of blue indicates that the trend strength is decreasing. For this darker shade of blue, it indicates that the strength of the bullish trend is decreasing, and it happens when the volume does not support the trend. Conversely, when the oscillator is colored brown, that indicates a long-term bearish trend. When it's colored bright brown like here, that indicates that the strength of the bearish trend is increasing. This only happens when the trend is backed by a substantial amount of volume. This is specifically when the sell volume is greater than the buy volume. This medium dark shade of brown indicates that the trend strength is decreasing. This occurs when the volume supports the trend, but the sell volume is lower than the buy volume. For this darker shade of brown, it signifies that the trend strength is decreasing, and it happens when the volume does not support the trend. Now looking at the settings of this indicator, we can see very few customizable options. For this video, we're going to change the line colors. We're going to change this first shade of blue to a lighter shade of green. Then for these last two shades, we're going to change them to this dark green. Then we're going to do the same right here. We're going to change the light brown color to this light red color. Then for these last two shades, we're going to change them to this dark red. After that, click OK. Now, how can we use this indicator to trade? Well, I'm going to show you. Now there are several ways that we can use this indicator to trade. The first method would be to use it to identify market divergences. A divergence occurs when an oscillator is doing the opposite of what the price action is to win. For example, here this is a bullish divergence because as you can see, the indicator histogram was creating higher lows while the price was creating lower lows. And then here we have a bearish divergence. The indicator histogram was creating lower highs while the price was creating higher highs. The second way of using this indicator to trade is to combine the fundamentals of short-term trends and long-term trends to identify pullbacks and to trade based on them. To do that, you first of all want to identify a long-term bullish trend using this indicator. The way you do that is, as we discussed before, this oscillator is used to identify long-term trends in the market. You want to have it be colored green like it is right here. After the pullback, you want it to change color back to green to indicate the end of the pullback. At the end of the pullback, this oscillator should be colored bright green like it is right here. After all these conditions are met, you enter a long position. And stop loss is recent swing low or target is 1:1.5 risk to reward ratio. Let's see here how plays out this trade, running in profit and hit the target. I hope you must have understood this trading strategy. And of course, it's going to be the opposite for a short trade. So as you can see, the oscillator was colored red, indicating a long-term bearish trend. Then the histogram changed color from red to green to indicate a market pullback, and then from green to red to confirm the end of that pullback. And then at the end of the pullback, the oscillator was also colored bright red. Now enter a short position here. And stop loss is recent swing high or target is 1:1.5 risk to reward ratio. Let's see here how plays out this trade, running in profit and hit the target. I hope you must have understood this trading strategy. Remember, nothing in this video should be taken as financial advice. This is purely for informational purposes. And if you liked the video, then subscribe to our channel so that you do not miss any of our new strategy. Happy trading! Thanks for watching our video.